Should silver be considered a critical mineral? No, it shouldn't. Silver is neither critical nor strategic. For a metal to be critical or strategic, it needs to be very important to industry, and silver is. It needs to be relatively scarce in the Earth's crust. So a strategic metal is something like platinum, where it's very critical to petroleum refining, chemical production catalysts, auto catalysts to clean up the atmosphere, certain electronic applications, aerospace engines, and a variety of other applications. But it's mined in a handful of countries that back in the 90s or prior to the 90s were hostile Soviet Union or apartheid South Africa. Critical minerals are similar, but they have somewhat broader availability. Silver's advantage over all these other metals is that it is mined in dozens of countries and it's relatively available, and there's a lot of above ground inventories. In the 1940s, the government told the Manhattan Project, we can't give you copper. It's a critical and strategic metal to the war effort. But we can give you as much silver as you want because people have been dumping 3.3 billion ounces of silver into our coffers since the 1870s. Silver strength lies in the fact that it's neither critical nor strategic. You want to screw up the silver market, you get the government to say, oh, this is a strategic or a critical metal. Silver should stay out of that area. Silver should say, no, we're here to meet your needs because we can. Little editorial there. Junior mining shares. Best indicators when I have a certain pessimism to the junior silver stocks as a group. There are some very interesting companies there, very interesting management, very good management, and very good properties. And you have to, as an investor, wade through all of this. Yeah, my good friend Tony Simon created the zombie list back in the 80s, I think. Yeah, here are the 800 companies, mining companies listed on the Toronto and what was then the Vancouver Stock Exchange. And here are the 150 that are cash positive. Yeah, that have more assets than they do have book value. You have to wade through that. And I think that the overall industry will continue to suffer from the fact that you have a lot of companies that probably ought not to exist. And a lot of investors who have said, gee, I have invested poorly in companies that ought not to exist. That doesn't mean that there aren't some really attractive companies that are very well managed. And if you want a list of companies to look at, go back to the second page and look at our sponsors, because those are the guys who are smart enough to plug into CPM Group's data and analysis. Yeah. And these are people, in some cases, came to us in 1993 when the price was $3.50. And they said, can you tell me why our institutional investor friends are all talking about silver? And we did. And they created companies. They sold them for very high prices to people who drove them into the ground because they didn't understand silver. And they've created new companies. So look at the sponsors and do your homework. As Ringo Starr said, it doesn't come easy. What's the next 5-year outlook for silver as an industrial metal? Well, that's an interesting one. And I'm going to show you some charts, but let me run through some other questions. Annual mine production versus consumed stuff. I've talked about that. There have been surpluses. The surpluses are diminishing because investors are not buying as much and because there has been some increase in silver, primarily in electronics and solar panels. I'll show you a breakdown in a second. This is the 4th year of demand exceeding mine supply. Wrong. Well, maybe that's right. mine supply, but you don't look at mine supply, you look at total supply. The COP, the Paris Accord, calls for a multiplying of photovoltaic production. Yeah, COP is a toothless observer of the photovoltaic solar panel industry. And what the International Energy Agency has said is the solar panel industry is fully formed and fully financed and is the best energy transition technology to move forward. And it's in the best position to move forward sooner because it's fully financed and fully formed and fully functional. So COP can say, oh, well, that's like the Pope saying he wishes everybody who wasn't married doesn't have sex. He can say that, but he has absolutely no power to impose it. And COP can say, gee, photovoltaic solar panels, that should increase because that would help reduce greenhouse emissions. They can say that all they want, but they have absolutely no enforcement power. The shorts have a religious experience if they don't get it right. Yeah. I don't know. Prices kept just above the production costs. Well, I showed you that earlier. That's not actually true. Right? Let's look at some data. Silver fabrication demand by industry. Now, the blue stuff at the top is photovoltaics, and it comes from 0 to 200 million ounces over the last quarter of a century, 23 years. It has propelled growth. If you take that out and you look at all of the other technologies and industries that use silver, it peaked at around 2005, 2006, and it hasn't gotten back anywhere near that. Now, we get more than 900 million ounces of silver being used in manufactured fabricated products, not investment products, not coins that could easily be melted down into bars. These are fabricated products. We're using more than 900 million ounces of silver a year 20 years ago. Now it's less than 800 million ounces. We've seen a diminution. Photo, which is the green stuff at the bottom, photography still uses silver, but it's a fraction of what it used to be. And important in terms of understanding the future of photovoltaics, you can see photo peaking at about 250 million ounces in the period around 2000, just before digital imaging came along. You can also see jewelry and silverware getting very big at that time. The price of silver was $3.5, $5.5 an ounce. How big of a silver piece of jewelry did you want? At $22 an ounce, I'm going to buy a piece of jewelry that has a lot less silver than I was going to buy when the price was $5. Electronics has grown, and we have electronics use in auto within that light. Other uses, which is just the enormous range of uses, has actually continued to grow. But the big growth in overall silver fabrication demand over the last 20 years has been due to photovoltaic use. So people are right to look at it. And you can see solar technology is now almost 20%, 1/5 of one out of every 5 ounces going into manufactured fabricated products is going into a photovoltaic. Jewelry, photography is that little blue thing at the top, 2.6%, where it used to be 1/3 of the market. Jewelry and silverware, still very important. Other uses, superconductors were there, but they've disappeared. Biocides, about 2% of the market. What is the maximum minimum projected consumption for solar and energy transition, electric vehicles and others? Well, we have our own projections. We do have minimum and maximum. We have different scenarios. The thrifting in silver in photovoltaic cells mean that demand is likely kept at 15% total silver demand despite growth. No, and in fact, it's already 19%, probably 15% if you throw investment demand in with fabrication demand. But then you're thinking poorly. So if you look at it as a percentage of fabrication demand, it's about 19% of fabrication demand, and it's not capped there. And are commercially viable alternatives to silver likely to emerge within the next decade that could replace silver in renewable energy use cases? It's possible, may not be probable. Silver has a tremendous advantage in terms of conductivity and low resistance, which makes it very useful for photovoltaic applications. Other metals can be used and are being used in some photovoltaic applications, but for the standard thing that most people think about, the panels that you see on rooftops or in solar farms, right now silver has a big leg up. You could see thrifting. You will see thrifting. You have seen thrifting, despite what some people say. And that will continue, but our expectation is that the demand will continue to grow. Now, these are our estimates of silver use in the photovoltaic industry over the last 3 years with our projection for this year. And you can see, I mentioned earlier, the large inventories of unsold solar panels hanging over the market in 2024. Even so, we expect the amount of the demand for silver in the photovoltaic industry to rise this year from last year's. Last year, we had 125 million ounce record amount of silver used in solar panels in 2022, and then it went up to about 194. So it rose very sharply last year. Perhaps 35 or 40% of that is now sitting in inventory to be used, to be sold. But our expectation is it's growing. Now, we do have projections for silver use in photovoltaic going out 10 years, but we charge people for that kind of insights. But we do see photo EV panels continuing to grow sharply, not as sharply as they did in 2023, interrupted by periods of financial stress, recession, and low economic growth, tampered with by the issues related to government subsidies for photovoltaic use, which governments will continue to muck around with inappropriately. And also primary newly refined silver coming. You'll see recycling of solar panels. You're already seeing recycling of solar panels. It's very interesting because we were on a panel with some other solar panel experts, and we mentioned the fact that people are recycling end-of-life solar panels. And one of the people said, no, they're not. I said, well, I'll have to tell my clients because they've been refining these things in some cases for several years now. And, with the buildup over time, you will get to a point where you have more and more solar panels being replaced. Now, I won't bore you with details on that one because we're probably already. Will the growth of AI drive silver? I have a complicated, multi-level view of artificial intelligence. And it's interesting because I was talking to some scientists I know, earlier this month, and we were talking about what they called true artificial intelligence, which hasn't been achieved yet. We have artificial intelligence right now. And we have a lot of people jumping on the AI bandwagon saying, this is AI's induced stuff. I don't know that the rise in artificial intelligence will drive major changes in the use of silver in fabricated products. What will drive the increased use of silver in fabricated products will be demand for those products, whether they're made by people or by computer-assisted manufacturing or computerized manufacturing or AI-driven computer manufacturing is relatively unimportant to the volume of silver being used and the volume of output. Insofar as AI might someday give us a better ability to look over the horizon and project demand, then it could modify the pace of volume changes in silver use in manufactured products. But I think that's a ways to come. And I think it's a relatively minor thing. The real key is to look for trends in the demand for silver-bearing products. That's what's going to drive it. We had a video a few weeks ago, the 6 questions investors, institutional investors, need to answer for themselves or with our help. And it was like, can you touch on this technique successful silver business? I mentioned a couple of things earlier, and I showed you that silver price chart. Successful silver investors understand that silver is a financial asset, like a currency or a stock or a bond or gold, and a commodity. And that the price rises and falls based on the fundamentals of the silver market and the yin and the yang of overall economic activity, the ebb and the flow. And the most intelligent and successful investors I know, as I said, there are several people who came to us in 1990, 1989, 1993, 94, and said, hey, talk to us about silver because the price is down really low. Mining companies are closing down. There are very few mining companies around to invest in that are silver investment companies. There were 3 listed in the United States. The Latin ones had very low floats. There was Equity Silver, which was actually majority owned by Placer Dome in Canada. There weren't a lot of silver script. And there wasn't a lot of demand for silver, and the price of silver was languishing at $3.50 to $5.50. And there were any number of intelligent investors who started buying silver. Our view at the time was, look, we think the silver price could rise and rise sharply. We wouldn't be surprised to see $10 silver at some point in the future, but it's not going to happen now because investment demand is so low. There's a lot of silver out there in the market. And we were right. The price languished until 2005, 2003. It started rising around 2003. Investors started backing away from selling so much silver around 1998, 1999. And the price started rising. Most of those investors, 93, 94, 95, Berkshire Hathaway bought 129.7 million ounces in 1997 at prices below $5. They sold it between $9 and $10 when the price got there. They missed out on some of the upside, but they more than doubled their price. And it was an investment that they said, we think we can buy below $5 now and sell close to $10 at some point in the future. And when that time came, they executed on the second half of their investment program. They didn't sit there and say, oh, I guess it's going to $50 or $100. Right? The good investors generate alpha by buying low and selling high. But many silver investors buy high and sell low. You saw that in those earlier charts. You got to get out of that thing. Not in the question then is, okay, is $22, $23 high or low? And the answer is yes. It's high from a long-term basis, but it's probably low from where we think it's going to go, looking at the fundamentals of supply and demand and the macroeconomic and political environment. So our expectation is that if you are a savvy investor and you don't believe all the nonsense that you hear about silver, if you are a rational investor, you can say, I can buy today at $22, $23 and think that I could probably sell it somewhere north of $28, maybe north of $30, maybe as much as $35, which was the annual average price in 2011, at some point in the future. It may be within the next 24 months. It may be within the next 5 years. So from that perspective, silver is cheap and it's a good investment. Right? From a long-term perspective, I know that it's high, but I know why it's high. And I know that investors are very bearish on it right now. So I can buy it now. But the second part to generate that alpha is when you see 28 or 30 or 35, either sell it or hedge it. Now, if you think that you want to own that silver, you buy the silver at $23, you keep it. When you see $28, you start buying long dated options, and you can pay for those puts with call spreads. So you don't have to put up premium. You give up some of the upside if the price keeps rising, but you don't hedge all of your position. You hedge a portion of your position at 28, prices north of 28. You hedge another portion at prices north of 30. And at some point, the price gets to a point, maybe it's $35, maybe on an intraday basis, it's $50. You know, and you say, okay, I'm going to either sell my silver and buy it back at $30 in a week or two, or I'm going to keep my silver and be fully hedged with option strategies that allow me to keep my silver, but profit should the price, in fact, fall back sharply. And if you look at the history of savvy silver investors, whether they're investing in silver bullion or silver mining companies, that's what they did. They built silver mining companies when the price was $5 an ounce, and they sold it when the price was $10, $15. Berkshire Hathaway, we're not going to be greedy. You know, if we can buy it below $5 in 1997 and then sell at $10 a decade later, we're really happy campers. Yeah, that's how you generate alpha investing in silver. If you buy it and hold it, regardless of where the price is going, and when the price gets to $35 or $50 on an intraday basis, and somebody in Vancouver or Laguna Beach is telling you it's going to 1,000, sell it. Now, that's how you generate alpha in silver and in gold.